Good morning. We are half an hour from the open in Hong Kong, Shanghai, and Shenzhen. You're watching the China Show. I'm David Ingles with Annabelle Droulers.
Our top stories. Cautious trading in Asia as investors brace for new Trump tariffs. The White House says measures will take immediate effect later Wednesday, even as Bloomberg learns the exact plans are still not finalized.
U.S. trading partners are mapping out their response to Liberation Day. Canada, Mexico, and the EU are promising to retaliate, while China calls the U.S. a bully.
And the Trump administration also set to discuss a deal on TikTok's American operations ahead of Saturday's deadline for a sale or ban.
Good morning. Welcome to the China Show. Hope you're all well. We're starting things off here as we look at some markets opening up right now with some breaking news coming out of China. They're starting to market the first sovereign green bonds. We're looking at this is an RMB. Listing. We're looking at a 3 and 5 years. We're looking at about 2.3 to 2.35%. That really comes on the back of other, I think, bond auctions that we get out of the CGB market. But we'll get more on that in a moment here.
Yeah, but in the meantime, of course, I mean, the sort of the main story today in town is the countdown to the tariffs,
yeah.
and really it's quite exceptional that we are learning that even the exact details of the approach that they're planning to take is still not clear. So you're really seeing that sort of trepidation, I think, coming across in market sentiment today. I mean, I took a look at trading volumes, for instance. They're pretty thin right now because I guess, people are just really, I mean, this is like the key wait-and-see mode, essentially. But just tracking the dollar gauge there, as you can see, not too much movement through, and Treasury yields, again, fairly steady so far. But China futures as well, because, of course, it's the countdown to the open, less than 30 minutes away so far. And the expectation for today, again, it's going to be really just that, what do we get exactly later on Wednesday? That's the state of play there. Again, not seeing too much action. Where we are seeing some movement, though, in the session so far is in the metal space, because it's going to be a pretty interesting story. We've seen a pretty significant run up, and we've seen gold, for instance. It's still holding near record high. So there's sort of again, back to this tariff question. Today, though, it's the metal stocks that are really under pressure so far. Tin as well to note. This is an interesting one because tin has hit its high since 2022. That is a bit more of a supply risk story, given what's happening in Myanmar. Of course, the ongoing story around the earthquake, Democratic Republic of Congo, again, some supply issues there. But essentially, we have seen them rising after strong manufacturing reports in China. And that was also part of the story yesterday in the session. Yeah,
there we go. And as Belle was just pointing out, the tin story, so Singapore, which is coming online right now, open about 0.8%. And in just a matter of, let's say, 30 seconds, we're now down about 1%. So again, it's either we're down in price, you're down in volume substantially, because there's a lot we don't know still. This close to that announcement coming out of the White House around this time, less than 24 hours away, let's put it that way. Right, now sources are telling us that President Trump's deliberations over his plans to impose reciprocal tariffs are actually coming down to the wire. Now, we're told his team is still finalizing the size and the scope of the new levies that he will be introducing and announcing on Wednesday in the U.S. Let's bring in our team, Jill Deeses, our news desk editor, and also our chief North Asia correspondent, Stephen Engel, to get us through the details of what we know and what we don't know. Jill, I'll start with you. We're close to the announcement, but we understand they're still working out the details here.
Yes, that is right. So what we're hearing is that these deliberations that are happening still within the White House right now indicate that they haven't settled on whether it's going to be something like a more detailed reciprocal plan like we've been hearing in recent weeks, where you've got specific tariff rates tailored to each of these countries, or if it's going to be something more like a tiered system where maybe you have blanket tariffs covering different tiers of countries based on whatever the Trump administration feels that these particular countries are doing in terms of trade imbalances and things like that. So I mean, it's really again kind of coming down to the wire. This does reflect a lot of what we've been seeing over the past several weeks, which is that it was for weeks that the Trump administration had been talking about doing something that was these much more individualized reciprocal tariffs, but really it's in recent days we've been reporting, as of others, that Trump himself has kind of made an about face, maybe wanted to go back to some of his earlier campaign promises where he did kind of, float this idea of blanket tariffs that could be as high as 20% or so across the world. So again, really just kind of shows you there that it may really not be until that 4 p.m. Eastern time Rose Garden press event that we've got tomorrow where we actually see what it is that the Trump administration has in store.
Yeah, well, okay, so we're around 19 hours then to go. So, Steve, I mean, we're confused about what's going to be announced. Is it also that level of confusion we're seeing in Beijing?
Well, I think China is getting its ducks in a row and has been for quite some time. As far as policy response, retaliation, we saw after the last time we had 10% increase in tariffs, bringing it to 20 under the new Trump administration. We saw China retaliate almost immediately with some tariffs of its own on Chinese or American agricultural exports, also an appeal to the WTO, a number of different steps on rare earth metals. So I'm sure they've lined those up, ready to push the button if Donald Trump comes out and adds to the tariffs already in place of 20% that he put on top of existing tariffs. This time, the 20% is on the fentanyl issue, which is something also that the foreign minister Wang Yi, in an interview with Russian media, blasted again, essentially saying the United States needs to remove these quote-unquote unjustified additional tariffs and also enter into equal talks before China can even have any kind of discussion about the fentanyl issue, an issue which, by the way, they have not even acknowledged is China's problem to its own domestic audience. So they are a long ways away from resolving the fentanyl issue. Now, as we approach this Liberation Day, what does this mean for China? We simply don't know. If it's another 20% on top of that, Bloomberg Economics has done a wonderful piece a couple of days ago, essentially looking at the severe case versus the less severe case. If 20% is added, that will bring the total across-the-board tariff rate on Chinese goods to about 52.8%. That would be close to what Donald Trump threatened on the campaign trail of 60%. So again, the Chinese levies on American goods is not as high as what America levies on Chinese goods. But because there are these non-tariff barriers that the United States has talked about, also these VAT, value-added tax rebates, that the Chinese officials give to Chinese exporters, that could be a precursor for essentially the Trump administration to say we need to add further tariffs.
For our viewers, on your screens, you're looking at measures of expected volatility on the euro and everything all the way down. That's the yen. That should be the Canadian dollar and also the Mexican peso, really. So you do understand markets are, I think, hedging for whatever outcome, sort of the reasonable amount of outcomes for tomorrow. Jill, the reason I bring this up, we're looking at the Canadian dollar and the Mexican peso here. We understand the two have actually had a conversation earlier, a few hours back. What do we know about that phone call?
Yes, that's right. So what we know is that Claudia Sheinbaum, Mexican president, as well as Mark Carney of Canada, did kind of have a discussion sort of walking through, the importance of building trading investment between them. So clearly you've got, these two trading partners who have obviously been targeted with, a lot of these tariffs, sort of talking to each other, just about how they can sort of strengthen that trading and investment, maybe a counter there to what they're ultimately expecting from the United States. Remember, though, I mean, look, when it comes to Canada and Mexico, we still don't actually know, once these tariffs take effect, how much of that is going to include what Trump has already announced in terms of measures against Canada and Mexico. We also know that there's been a lot of negotiation over the past month or so, with certain carve-outs and exemptions. Certainly, Claudia Sheinbaum, the Mexican president, has said, very recently, this is sort of driving the peso up a little bit, that she's hoping that you still have, some exemptions that continue to apply after these tariffs go into effect that are based on the trade agreement between these three countries, Canada, Mexico, and the United States, that was negotiated during Trump's first term in office. So ultimately, again, I think still a little bit of uncertainty there, but you do at least have that indication that Canada and Mexico are, talking to each other, maybe trying to figure out, how to hedge ahead of, additional announcements. But again, it does still seem like anything is on the table at this point.
And this is a really big week for the US-China relationship, because in addition to this, we're also waiting for any sort of readout we get on this report from the White House with China's compliance in the Phase 1 trade deal.
Yeah, so the U.S. Trade Representative's office was tasked on day one of this second Trump administration to do a review of Phase 1 trade deal, where China was supposed to buy an extra $200 billion worth of American goods, largely agricultural. Obviously, we know what happened in between the Trump and Biden administrations. We had the global pandemic. China did not fulfill many of its obligations or its promises made. So we haven't gotten those results yet from the review, which will likely be as well kind of a base for the Trump administration to go further or pull back based on the results of that review. But again, you know, the former USTR head, Catherine Tai, was on Bloomberg Television as well, and she essentially said that we have to all kind of wait to see what this next step of reciprocal tariffs towards China are going to be. Let's hear from Catherine Tai.
What I would want to do when I see the announcement, right, is just bring the heart rate down, take a look at what's on paper and what they're saying. First, what's the legal authority that they are invoking? And is there a legal authority they're invoking? That's really important, because increasingly we are seeing from this administration a willingness to buck the rule of law.
So we're all waiting. And again, you brought up at the headlines the TikTok issue, too. That's another story that we're going to be discussing as well, whether it's Blackstone and Oracle teaming up to possibly make that bid. But keep in mind, was it a week or so? I've lost track of all form of time over the last 2 months. Donald Trump floated the idea of, you know, if China can basically let go of TikTok to a U.S. buyer, maybe there's room to negotiate as well on tariffs. So.
Yeah, could end up being maybe something involving Oracle and Blackstone. That's what the reporting is so far. That's Bloomberg's news desk editor Jill Desis and our North Asia chief correspondent Stephen Engel. And still to come, we're actually going to get more on that TikTok deal as well. President Trump said to be planning a meeting later on Wednesday to discuss the social media app's future in the US. Again, it's sort of that deadline of April 5, so we'll have details on that ahead. And also taking a look at what's happening with the trading session ahead of the open, because Xiaomi is looking like it's going to open a lot lower. Yeah,
we're looking at a price of about, I would guess about 8 to 10%. That's just rough projection based on the current indicated pricing right now, after the company confirmed that one of its SU7 EVs was involved in an accident on an expressway in China. That did, of course, include driver assistance, and 3 people, unfortunately and tragically, of course, passed away from that accident. More ahead here on the China Show. The Open, 17 minutes away. Good morning and welcome back. You're watching the China Show. So the lots on deck today, obviously the backdrop here is the countdown, just about 19 hours away from the Rose Garden announcement out of the White House. Early morning out of the Asia Pacific should happen right after markets in the U.S. close, right before, of course, things get underway. So we're counting down to the tariff announcement. In what shape and form, size and scope, and we understand from sources that things are still being worked out within the White House team. I think that is point and major point number one. Implied vol's on the way up across most of the FX market space, and particularly when you look at the overnight rates. We talked about most of this already. I mean, we're also looking for any more updates out of the Panama deal. April 2 was also the date given for an update there, so just stay tuned for that. We have a 2- and 10-year bond auction today on top of the breaking news I think we had earlier on the first sovereign green bond coming out of China. In terms of earnings, I think the bottle tells you everything you need to know about the company reporting today. Kweichow Moutai is set to report later today. Now, on top of all this, we have Xiaomi, which is indicated substantially lower. We can get to that in a moment. And we're also looking at HIBOR rates in Hong Kong, right? So this actually, when you think about how the tariff macro conversation is playing out as far as rates in Hong Kong are concerned, you have the 2-year Treasury, which is, I guess, a benchmark proxy for Fed expectations, is now the lowest in about 6 or 7 months. The HIBOR rate is actually now very close. Those are the levels to watch to taking out those levels below which we will be finding ourselves back in 2023 levels. 13 minutes to the opening bell. Yep, lots to talk about here, Bill.
Yeah, and as you said, it's really that big focus, the countdown to Trump's tariff announcement, and also headlining that right now is just how much uncertainty there is, given that we're hearing that there's still a range of different scenarios that are possibly being mulled over and discussed. So let's get more on this now. Bring in Yong Chin. He's China chief economist at Sumitomo Mitsui Banking's Treasury Department. And Yong, thanks so much for joining us this morning. So, of course, it is a period of great uncertainty, but how are you thinking about this tariff announcement ahead of that countdown? Because I think we're about 19 hours away now from the meeting.
Yeah, I think it's more ideology changes of the tariffs regime or even the fiscal income system. There are periods back in the United history, right after the Civil War, that the tariffs rates set at as high as 40% or even higher, which makes tariffs revenue the main source of the federal government's fiscal income. But the reciprocal tariffs are based on their fair trade tenet, and it's targeting all the nations without discrimination. So I think it's more like a revenue consideration. And also during the Trump's first term, the tariffs revenue did experience a high growth period. Yeah,
okay,
but
so
there are polls and
Yong Chin, I want to understand though how you guys are gaming out the economic fallout on the Chinese economy.
I think considering the situation right now and with go back to the environment in 2018, there are more challenges. First, back in 2018, China has more rooms to foster a stable economic growth. To be specific, the real estate sector was still the main drive for the GDP growth. But right now, the real estate sector are yet to bottom out. And second, during the Trump's first term, there are estimates that renminbi devaluation has offset large part of the tariffs impact. But considering right now, if the renminbi devaluation by a large margin comparable to the tariffs raise, it's going to be a huge concern over China assets. And that's probably why we hear from the officials in lots of occasions asserted a tough stance against a stable renminbi. And thirdly, if we go back to Trump's first term, China has alleviated the tariffs impact by offshoring and nearshoring. But as I have just said, that the reciprocal tariffs is indiscriminative, so which means the same tariffs raise will exert a harder blow to China's export sector and ultimately to the whole economy.
Right. Right. So, Yong Chin, the simple question is, do we need to be concerned about the economic fallout in China or not?
I think it also depends on what kind of policies China is going to take against the announcement we are all waiting for. But considering the 10% tariffs levied against China on February and March, respectively, I think China, the countermeasures taken by China government are pretty restricted and show their soft stance. I think it's a good start. Also, the government working report of NPR, the China government declared IRR and interest rate cut at appropriate time. I think it's the best window for more policies. As I just pointed out, any agreement between China and the U.S. might lag quite a bit, so the domestic policy should prioritize.
Yong Chin, thank you so much for the time. Chief economist there, Chief China economist at Sumitomo Mitsui Banking Corporation China there in Shanghai for us. Just giving us their take on, again, this is a very difficult scenario analysis to model, really, because, you know what, to be honest, we don't even know how things will look this time tomorrow. And we don't even know, of course, how how counterparts are going to respond, and whether or not, if you take the guidance out of Scott Bessent, that anything that will be announced tomorrow will likely be a cap. In other words, that's the worst case, and then we work backward from there, depending on who gets in the call with Donald Trump. More on that, of course, coming through. The next 24 hours are going to be extremely busy for financial markets. Right. For our Bloomberg subscribers, by the way, we can catch our Bloomberg Economics team have also put out their analysis looking ahead to these Trump reciprocal duties and what they mean for exports and also growth. Do check that out. They've gamed scenarios out there to the best extent possible. Very, very quickly, we're looking at also some lines coming through. Speaking of and underscore the uncertainty out there coming through out of Japan, Governor Ueda is effectively talking about how uncertainties are still high, stating the obvious over the impact of the oncoming tariffs. We're weaker on the Japanese currency, but we're on the stronger side of the 150 handle bill.
Yeah, and we've also just got pre-market starting in Hong Kong this morning. So Xiaomi shares are down for a fifth session today. Of course, the news was over the weekend. We had that really tragic incident where there's been a crash on an expressway in China. It resulted in 3 deaths. And so the company could face some questions over the rollout of its driver assistance technology, and also as it plans to scale up its EVs, how it plans to address this incident as well. So Xiaomi, again, under pressure a little bit so far in pre-market, but broadly we are setting up for a day in the red. We'll have more ahead. This is Bloomberg.
Right, welcome back. We're looking at this is fairly misleading if you look at the price itself. But certainly the tentativeness is palpable when you look at, I guess, the lack of price action in these markets. But you look at volumes, as Bell was pointing out, we're on the lighter side of things. It's really across the second derivatives like implied vol, where you are seeing investors and traders expressing their hedging ahead of tariffs tomorrow. But there are lots of other idiosyncratic stories here. I think we had some car numbers coming through and car sales numbers coming through. And just to make, I think, very, very simple, we'll talk about Xiaomi in a moment there. The BYD story, nearly 1 million vehicle deliveries in the first quarter. Over 40% were pure EVs. And I think that really just underscores how far the story has come. 58%, nearly 60%. In the first quarter. Right. Xiaomi, of course, we're very much focused on this one, too.
Yeah, that's because there was an incident over the weekend where there was a crash essentially on an expressway. 3 people died. There's a lot of questions over the rollout of their driver assistance technology. And so you're seeing that stocks, again, under pressure there. Yesterday, it was down more than 5%. So certainly be waiting for any further updates. We've already heard from Lei Jun, for instance, on that. Still in the tech space, though, another name we're watching is Alibaba. And this is, of course, a very different story. As you're saying, lots of different themes to keep across this morning, but they are preparing to release another, essentially QN is their flagship AI model. We're preparing for an update to that. It could come in the next couple of weeks.
Okay, and just to tell you about the last one on your screens coming up shortly, we're down about 6.5% on Uji XTC. It's a holder stake sale at about the price you're looking at on your screen. So it was a discount and a placement along those lines. 280 million was the size of the deal. The open is next.
Welcome back. You're watching The China Show, counting down to the start of trading this morning. We are a little under 19 hours away now before we get any sort of clarity from President Trump on the direction he's likely to take with tariffs. There's a range of different scenarios that are being discussed, and it does really seem to be coming down to the wire. And so you're seeing that level of uncertainty being expressed in a few different ways. I was talking about thinner trading volumes. You were taking a look at implied volatility as well.
Yeah, and it's I think the question markets are grappling with right now, because it looks like they're coming down to the wire here, in that we've started out by pricing in the worst case. And the question is that the worst case, 20% blanket on everything, and then we work back from there. And what the upside risk is to that, given if we do see sort of an individual treatment depending on the setup between those specific economies and the U.S. economy and how those trade barriers act as well. It's perhaps worth mentioning as well that when you look at sort of on the very surface and in the cash markets, we're not really getting a lot of movement, which I guess tells you most of it might already, in fact, be in the price. And there's a lot just of hedging going on beneath the hood. But we'll talk about that. We'll talk about that later. The state of play right across these markets right now is we do have a bond auction today. Just keep that in mind. 2- and 10-year bonds out of China. You have Kweichow Moutai, which is bottom row, leftmost side, reporting earnings today, among many other companies coming out as well with their earnings here. The story across Hong Kong markets up yesterday. Should be down today, giving back those gains. I mean, we have been, let's call it a 3-week consolidation process for these markets, maybe 4 weeks if you include this week, if things remain pretty much range-bound at about these levels for the most part. But looking at shares of Xiaomi, which are down about 3.2%, the initial pricing had this actually trading much lower than the 45 handle here. The company did confirm, of course, that accident, which involved driver assistance in that specific vehicle. Let's please change the page, and a couple of other moves to tell you about. Speaking of cars, your BYD out with some sales numbers coming through as well. We have Wuxi XDC, which is down because of a placement. The pricing at about just under 43, which is, as you can see, where the market is catching up or catching down to. We're hearing out of Reuters a report here that Luxshare is actually looking at a listing. That's the onshore listing, or the only listing, at a possible one here in Hong Kong. And of course, just to mark your calendars too, that today we're looking for any updates on whether this Panama deal in fact goes through or not, or at least the next landmark as far as the developing story is concerned. Right, JP Morgan was out with upgrades to these names on your screens. It's not playing out across these markets, as you can see. But effectively, several Chinese and Hong Kong developers, they've effectively notched up some of their calls individually for a lot of these names as well. But yeah, back to the macro. We're done with the first quarter. Most equity markets were down. I mean, China was a standout. Europe was one as well. Singapore, apart from that, most other markets are either in a correction, near a correction, or even approaching a bear market. And as far as FX goes, we're really seeing this play out on the very short end of the implied vol curve here, Belle.
Yeah, I mean, you're really seeing the most movement in the one-day implied volatility, which, again, points to...
Captures tomorrow.
Exactly, yeah, and people just really trying to understand where Trump is going to take this tariff story and this tariff question. Again, you can see it, given we've also heard Canada, Mexican leaders have also been meeting ahead of this. Again, they're trying to figure out how they can work together to maintain the resilience, I guess, of the North American trade flows. But again, you can see these currencies or these bets on currency flows. So you're certainly seeing quite a lot of volatility that's being implied. Let's get more now, though. Joining us exclusively is Carol Fong. She's Group CEO of CGS International. And Carol, of course, given this amount of uncertainty, and it's also not uncertainty just for tomorrow, but it's uncertainty for possibly months. If any sort of tariffs are announced, then it's also the negotiations of those tariffs, how they're applied, to the extent that they're applied as well, the exemptions that are at play. How do you advise clients to I guess, prepare for these risks, but also to take profit from them if they can?
Thank you very much. Good morning, Annabelle and David. First of all, I would say that the market likes certainty because, I mean, it's the uncertainty that creates, I think, the volatility in the market. I think once Trump actually announces the tariffs, and then what you're going to find is that the markets then will actually, in my view, would have expected a lot of the uncertainty to be priced in already. And at this point in time, I think that the volatile markets has resulted in traders coming in. But ultimately, I would say that one would expect that the markets will settle down and look at what other countries would do to reciprocate in terms of the tariffs.
Understood. Carol, well, Carol, first, apologies for that. I believe there were some technical difficulties that we've hopefully have now been smoothened out. But yeah, I guess apart from the advice, obviously, that we can give, given the clarity that we now have, what are some of the consistent themes that you so far still have confidence on as far as your business goes?
Now, if you look at it holistically, I mean, tariffs have been talked about, since August, September last year, and I think if you again look at the countries in ASEAN in particular that are perhaps on the radar screen of Trump's tariff scheme, you notice that China obviously is number one, Canada, Mexico, and if you look at the ASEAN countries, Malaysia, Thailand, Indonesia, and Singapore, they're not very high up the tariff list. Singapore, in fact, is in a surplus situation, whereas Thailand, Malaysia, Indonesia, number 12 to number 15 in that kind of range. So I think what the market is uncertain about, of course, is that whether or not the tariffs would hit basically not only the top 5 countries, but also every other country that it trades with. So in that sense, I think that the market is pricing in some sort of tariff expectations that Trump will put in. But overall, I would say that the market is already expecting some tariffs. So my belief is that when it happens, the market will have kind of expected it already. And it will create certainty in the market.
Right. And I think, Carol, I'm glad you brought that up because, apart from, I think, Singapore, which to your point seems to be a good hedge in all this. I mean, the market's done very well despite everything else that's going on. The rest of Southeast Asia, though, I look at Indonesia, they have idiosyncratic issues. I look at Malaysia, Vietnam, the Philippines, Thailand. These are some of the worst performing benchmarks year to date. And I'm wondering, to your point, do you think markets are overly pessimistic about what's going on here? Or is there something else going on in ASEAN?
Well, I think that the market is overly pessimistic, especially on the tariff front. But there are, I think, that fundamental issues in each country that has resulted in, I think, the markets underperforming. Obviously, each country has its own issues. For example, Indonesia, quite obvious that the government policies is right now being questioned. The rupiah has declined substantially, and so on. It's declined, about 5% over the last few months, and the markets will, I think, adjust, accordingly as we move along during the year. But overall, I'm optimistic. Optimistic because of the fact that I think that China and ASEAN will come closer together. And, you already see that it's not only the China plus 1 strategy, it's now a China plus 2 plus 3 strategy. And recently, I came back from a trip, visiting, bringing Chinese clients, investors, to ASEAN. And there's a lot of optimism and hope that, that there will be even further stronger relationships between ASEAN and China. And that's where I think CGS International plays a part, because we have 46 years of history in ASEAN, and we have a very strong Chinese parentage. We are owned by CIC, which of course is the largest sovereign fund in the world. And I think that with all the geopolitics, the tariff issues and all that, China and ASEAN will come closer together.
That's the flow from China into ASEAN. What about in the other direction, and what's the sentiment that you're hearing as well on investment potential in the mainland market?
If you look at it holistically, I think a year ago, a lot of people would have said that China was uninvestable. But you fast forward to today, and what has happened? In January of this year, DeepSeek and then all the hype around the AI technology in China has created, I think, what I would call a multiplier effect, in the sense that a lot of ASEAN countries now are looking to China as perhaps an alternative to US AI and other potential investments. So definitely a lot of interest right now in China, and it's reflected in the markets, right? Hong Kong is up about 20% this year, China about 15%, even though it has actually undergone some correction. And the valuations in these markets are still much cheaper than the US. So I think that interest in China, interest for ASEAN into China, China into ASEAN will actually continue to become stronger in the years ahead.
Yeah, Carol, and I think the point you just made there is that you guys are, I guess, in many ways perfectly positioned to facilitate those flows. I was wondering if you could be more specific on, are there specific sectors or types of clients, whether that's on the ASEAN side or the Chinese side of things, where you think your team might just be a lot busier this week dealing with this year?
And thank you for the question, David. In fact, what CGS International has done is that over the last 1.5 years, we obtained our investment banking licenses in Singapore, Malaysia, Indonesia, Thailand. And from a team of one person, we now have 40 investment professionals in the region. And we've done 40 IB deals, out of which 14 were IPOs. And we see actually that there is a strong, I would say, intent to get some Chinese companies dual listed here in Singapore and in other countries as well. So that's one growth area. Asset management, wealth management is something else that we're also quite keen to grow. And I'm also happy to say that on the private equity space, we're working very closely with our parent company, China Galaxy in China, to set up a private equity fund, specifically, I think, looking at a China angle, where Chinese companies can come to ASEAN and ASEAN companies can work with Chinese technology as well as going into China to have a win-win situation for both China and ASEAN.
And it sounds like you've got some
hiring to do.
Hiring, yes. So what's your plan
That's
then
right,
around
correct.
adding headcount? And where are you looking to add which areas of the business as well?
Yeah.
Yeah, and again, this is interesting, right? Because we know that some investment banks, of course, has been reducing their headcount because obviously the IPO flow as well as investment banking deals have been quite muted, I would say, over the last 1.5 years. But we're starting from scratch. We're kind of like the new kid on the ground, right? We're hungry, we're passionate, and we're working very closely with again my parent China Galaxy and CIC to increase the flow between China and ASEAN. No, China Galaxy Securities in China has 600 investment bankers. We have 40. So I don't think we need to go to 100, but we can work very closely, with our colleagues in China, tap on their expertise, tap on their workforce, and then work together to get more flow into the capital markets into ASEAN. So not really looking to hire a lot more at this point in time. Yeah.
And just speaking to the size of Galaxy as well, because there was a report that China Galaxy Securities and CICC are looking to merge, which would create China's third largest broker by assets. So can you give us any update on that?
Honestly speaking, we will probably be the last to know, if there's a potential merger. There has been a lot of rumors and talks in the market. But I think the Chinese government itself, you look at it, right, they have made certain statements about creating what you call global powerhouses. You've seen the first merger happen. And whether CICC and CGS merge, I think that we'll just have to wait patiently and let the powers to be decide. It's beyond my pay grade, actually.
Okay, Carol. And I suspect us working in news, there's a chance we might actually find out before you do. So we'll let you know if we hear anything, or you can turn to your Bloomberg.
Thank you very much.
If you find out anything, you know how to reach us, right? All right, Carol, thank you so much for the time. Carol
Absolutely,
Fong,
absolutely.
Group CEO there at CGS International, joining us out of Singapore. In fact, coming up on shows as well, to the point that Carol was just making there, these flows, potential listings from China into Singapore. Geoff Howie at SGX joins us at the top of the next hour. Plenty more ahead. A look at markets right now. This is The China Show.
You're watching The China Show and taking a look at shares of Xiaomi here. So we're into a fifth day of declines. That's really been exacerbated by weekend moves, because there was unfortunately a crash on an expressway where 3 people died, and it's being linked back to Xiaomi's driverless or assistance driving program, essentially. So this stock is really one to watch, and what we're also seeing so far is a lot of the selling is being led by southbound investors who are still major holders of the stock, but just an interesting anecdote, I guess, of what we're seeing as well so far. Okay, yeah. We'll get you an update further, of course, as it did look like the stock was going to fall much further than this, but still, of course, down 2.5%, and certainly does not in any ways trivialize to the point we were just making there, the tragedy, of course, which took place there with that accident. Okay, let's talk about another story now. So this actually broke about just right before we started shows right now, this China's first sovereign green bond. Let's bring in Loretta Chen to take us through, of course, what we know so far. And they are, what do we know? They're marketing it today, aren't they?
Yeah, so this is the first ever green bond sold by the Ministry of Finance in China, and it comes after a visit from the UK Minister of the Chequer, basically for the two countries to closer to improve their ties and exchange the financial relationships. And I think it also comes at an important time because globally we're seeing a backtracking of green bond sales. This year is actually the slowest for green bonds in a decade. And China is still spearheading, its lead in that green bond market, while the U.S., obviously is backtracking from all these green financial projects. It's also exiting, the climate initiatives. So we think it's an interesting move, and also we'll be watching what kind of investor appetite will come at the green bond sale.
Yeah, well, on that, so two questions. Investor appetite, what's it likely to look like? And secondly, how is this going to be priced as well?
So this current issue is going to be denominated in offshore yuan. So obviously, a large part of the appetite will come from the Chinese institutions, maybe their overseas branches. And then the other part is that it will be listed in London, particularly on a sustainable exchange. So we expect to see some European investors to continue to show their interest. And in terms of pricing, it's quite low for the Chinese yuan, also partly because the interest rates on the yuan is low compared to the dollar. So we'll have to watch, the market response. But I think overall it's quite a positive mood for the green bond market.
All right, that was our Bloomberg China credit reporter, Loretta Chen there. And shifting to another story, because this was an original target date of today, actually, for CK Hutchison to sign essentially this controversial deal to sell its Panama Canal ports to a consortium that includes BlackRock. But that deadline, maybe it's going to come and then go. Let's get more with our conglomerates reporter, Shirley Zhao, with us here this morning in studio. And Shirley, so what sort of, again, we're talking about scenarios for Trump tariffs, but what are the scenarios for this one as well?
So what we've learned is that they're unlikely to sign an agreement on the Panama part of the deal with the buying consortium, which includes BlackRock and a Europe-based container port operator, TIL. So we learned from sources that works are still progressing, talks are still progressing, but they just need more time to complete related works, including tax, accounting, due diligence, etc. That's why there's a potential delay on this. And April the 2nd, we learned from sources, is not a hard deadline, but a target that they set. And now there may be a delay because there's extra work to do.
So assuming we get to the end of the day without any developments, what does this mean then for the deal itself?
So the deal is not off, but then, there are more works to be done. And the Panama part of the deal is part of a wider deal that actually covers 43 ports all around the world owned by CK Hutchison. We know that there is a 145-day period for exclusive talks between the buyer and the seller. So works are progressing in this context. But we also want to note that the potential delay came after China has piled pressure on Li Ka-shing and CK Hutchison. For example, we have reported earlier that Chinese authorities are telling state-owned companies to hold off new collaboration with Li Ka-shing and his family, and some Chinese state agencies are looking into the deal for potential national security and antitrust breaches. And Da Gongbao earlier also reported that China's antitrust agency will also look into the deal. And the antitrust agency, of course, reposted the Da Gongbao article on their social media account. So we can see that China is pretty unhappy about the deal, and there's increasing pressure on CK Hutchison to back out from the deal. So there is still a lot of uncertainty, and I think a lot of investors are just taking a wait-and-see tactic at this moment.
Shirley, thank you so much for the update there. Shirley Zhao has been on top, of course, of this story from the very get-go here. Right, we'll just head into a very short break. We'll leave you with a look at markets right now. So we're near session lows on stocks. U.S. futures, ditto. Volumes are about 30% lighter than usual, just about across the board here in the Asia Pacific. I think we know why. This is Bloomberg. Welcome back. Right, just an update here of this developing story, this time out of Thailand. It still concerns tariffs, and we understand that Thailand will be adopting what they describe as a holistic approach to negotiate with the U.S. government. The Permanent Secretary for Commerce are commenting on that as well. They're also mentioning that they do see an impact. They have a number out, $7 to $8 billion impact on their exports if the U.S. raises taxes or tariffs by 11%. And I think the important caveat here is it does seem that more and more countries might be willing to have a separate conversation with the White House in order to avoid, of course, what might end up being blanket tariffs. Again, more on this in a moment. Thailand does aim to reduce its trade surplus. There we go, with the United States.
Yeah, well, I guess we can probably expect to hear from a range of different countries as they plan to maybe have one-on-one discussions with the Trump administration about how they sort of mitigate the impact of tariffs that are levied. But certainly that level of uncertainty over which direction the White House takes is really coming across in market sentiment this morning, because we're seeing implied volatility on a range of different currencies that's spiking. You're seeing lower trading volumes. You've got Asian equities that are fairly flat actually right now. I'm just taking a look at the board. So we came online in the red, but we've actually just managed to sort of lift off the session lows this morning. China, though, is coming under pressure so far. And you've got the Hang Seng down around 0.5%. You are seeing some moves as well in the metals and broader commodity space, and those have been moving higher, but you can see there Shanghai crude, for instance, iron ore, that's the Dalian contract. Those are a little bit stronger. But we did see those improving PMI figures as well.
Yeah.
So I guess that kind of was something that was feeding into sentiment. What else we're tracking in the session today?
Well, I think it's great that you mentioned that, because coming up, I think later on, we'll be talking about the Bloomberg Economics report. Is there enough momentum right now in this Chinese economy that makes it in some ways kryptonite to what's going on here on the tariff front? Plenty more ahead. Okay, good morning. 30 minutes into the cash market session here. We're coming off lows a little bit. We're still down in price. Volumes are on the lighter side of things. While I think this reality, or is it a reality we're in right now as we try and figure out what the next 24 hours looks like, it does seem like somewhat a version of Alice in Wonderland. The thing is, though, none of this is metaphorical, if you think about it. And certainly the irony there is trying to distinguish between what is a mirage from the mirror, or the mirror in the mirage. And anyway, we'll find out what the settings are of the trade barriers, or the global trade settings, by this time tomorrow. The latest here, as you look at some of these implieds coming up on your screens very shortly, is really you're getting a lot more countries coming out and saying that they are willing to have a conversation separately or individually with Donald Trump. I think case in point was Thailand, that they are looking to reduce their trade surplus. You do get the incentive, the motivation behind that statement. They put out a number here as far as what they expect to be the impact on exports if the U.S. raises taxes there by 11%. It's a 7 to 8 billion impact on Thailand itself. So we can talk about that later on. Markets, as you can see on the short end of the vol curve, are really picking up the steam here. We're up 4 points here on the overnight on dollar China. And as far as majors go, I think we have that coming up on your screens very shortly. These are all your overnights from the euro, the yen, the Canadian dollar, and the Mexican peso. There we go. So the markets are effectively bracing for fireworks this time tomorrow, Bill.
Yeah, and I think to your point around sort of these individual negotiations that we can expect to see. I mean, we also heard from Japan, for instance, and Ueda was asked some questions earlier this morning in Parliament, saying that they're also going to be, again, comprehensively examining the impact of US measures, as you might expect, but they are as well anticipating some sort of flow-on effects to trade activity, sentiment as well, and that is really coming across this morning. When you take a look at broader Asian sentiment so far, we have lifted off the lows of the day, but trading volumes are very, very thin as we await, of course, what is a very tariff-focused week so far, and it's going to continue to be that way as well. But some of our guests on the China show have been talking about Trump's plans, of course, and the likely impact it's going to have on their businesses. So take a listen.
President Trump has called Wednesday Liberation Day, and that seems like liberation from the rules-based order on trade. We're expecting, as you mentioned, reciprocal tariffs. But my sense is that within the administration, they're still debating the rates, the countries that would be subject to these tariffs, and the products that would be covered. But I think we can expect significant new tariffs to be placed on countries with whom we have substantial trade deficits with.
You know, I don't think that for Europe there's a question about choosing the U.S. or choosing China. But I think it's something of a divorce from the United States, and I don't think that Europe is ready to jump into a rebound relationship, to put it that way.
The Chinese have ramped up on manufacturing, on the electric vehicle side, for example, right? I don't know who takes up the slack if the U.S. is saying, no mas, our borders are closed. So I think these trade deals are useful. Maybe they're indicative of other countries saying, look, we'll band together to come up with reciprocal tariffs on the U.S. if we are hurt badly. But what is the direction we are going in this global trade war? There's just no positives here from an economic standpoint that I can find.
The margins in many of these enterprises are already at razor-thin levels. And remember that these are largely manufacturing enterprises. They do not have brand marketing power, so they're really subject to the vagaries of pricing in the market.
For more analysis on what this means for the Chinese economy, let's bring in our chief Asia economist, Chang Shu, here with us in our studios. You guys have put out this report on how this impacts exports and growth. Take us through the thesis here.
Yeah, so the impact will be huge. Yeah. Even now, with a 20% hike in the past 2 months, the impact is already very big. We saw the exports softening in February already, and if we believe big models, our trade team run a big model and suggests over the medium term, direct trade to the U.S. could go down by as much as over 60%. So that's huge. And we are only talking about direct impact here. If we think, the tariff can bring a softer global economy, further reducing demand for China's goods, and also there are less avenues to divert China's exports, then all those direct and indirect impact will add up. And that's a big negative for the Chinese economy, which is trying to find its footing at this point.
And what are you seeing for China in particular then?
Yeah. Yes, that's indeed for China in particular. The impact is quite big, and if we look at potential direct hits on China's trade to the U.S. and indirect hits on the global economy and the ways for diversifying China's trade. Yeah.
I'm trying to figure out. So I had a look at, say, the Chinese currency and how it traded during Trump 1.0. And in other words, why has the currency been so stable and behaved this time around is my question. And do we get a repeat of the depreciation we saw in the Chinese currency back then? How might China respond otherwise?
Yeah. So let me take your second question first, how China might respond officially. I would suggest it's smart for China to continue its current measured but targeted way to respond to the U.S. We know after hiking the U.S. tariff hikes of 20% over the past 2 months, China made its unhappiness known, unleashing some targeted measures, export controls on rare earth and raising tariffs on agriculture and energy products. But overall, the response has been quite muted. We only raised no more than 3 percentage points in average tariffs on U.S. goods. So by comparison, that's maybe a step compared to the 20% hike. And going forward, we do see China continues this way. I mean, adding more tariffs, kind of in a more universal way on the U.S. goods, that's going to hurt Chinese economy. As we talked about, Chinese economy is in poor shape at this point, so you don't want to add on the pain. At the same time, I think China also wants, like many other countries, wants to talk to the U.S. So you sort of we do expect a fairly low-key sort of response. And in terms of currency, the currency at this point is holding up. It's coincidental in a way because we know over the last few months the DeepSeek success has lifted sentiment somewhat, and people are holding greater hope for the Chinese economy. Therefore, the currency has been holding up. But going forward, it really depends on how the global setting, in this case, how the global setting could be. It could be that the whole world economy tanks, and at this point, the US dollar by default will strengthen against the rest of the currencies. So at this point, I don't see the Chinese yuan will have idiosyncratic movement against the US dollar, more sort of trends aligning with the rest of other currencies.
All right, that was our Bloomberg Economics Chief Asia economist Chang Shu there. And for terminal subscribers as well, our Bloomberg Economics team has been looking ahead to Trump's reciprocal duties and what they might mean for China's exports and growth. So you can take a look at that research as well to get more into the details as we count down, of course, to this deadline.
Yeah, let's get a sense of market flows and how that might be able to inform us about future short-term price trends amidst the uncertainty and hopefully the certainty this time tomorrow. Let's bring in Geoff Howie, market strategist at the Singapore Exchange, joining us out of Singapore. Geoff, good morning, and thank you for taking the time to spend a couple of minutes with us. Let's start with something very simple, if we could. What are equity flows telling you right now about the mood of this market ahead of tomorrow?
I think the mood is mixed. I think obviously more downside risk has been priced in than upside risk. So I guess you've got to look at where the upside risks are, David. And, there could be a surprise. 4 a.m. our time tomorrow, you might have the Trump administration coming out with a lot of certainty with their tariff program that might alleviate some of the potential trade tensions and spirals of a trade war and so forth. I think if you look at what the Treasury Secretary, what the US Trade Rep, and what the Commerce Secretary have been saying together, it implies there could be some hope for a very systematic program. I mean, Scott Bessent's always been about if you're going to employ general tariffs, they have to be very clear and they have to be very systematic. And then you also look at what US Trade Rep Jamison Greer's been saying. A lot of his contention has been that he doesn't see the World Trade Organization appellant body working so very well. So some way with this program, the US might be looking to have some type of appellant system with these tariffs. And then you look at what Commerce Secretary Howard Lutnick's been saying. He wants room for negotiation. So I would expect something like Scott Bessent's been saying, where you have buckets. You have the red bucket, amber bucket, and green bucket, and then you also have a look at the the points of contention like the VAT and the exchange rates, non-tariff barriers, tariffs on US products, as well as other potential unfair practices.
So, I mean, what then is the outcome? If you're saying that we get greater clarity tomorrow, what sort of expectation do you
Annabelle,
have on that actually being? Go ahead.
That's just looking at the background of what the administration folks have been saying at their forums and so forth. The fact that it's been moved forward to 4 a.m. our time versus 3 a.m. our time after market close shows they are cognizant of market risks as well. And we also did see a couple of weeks ago when it was heating up, remember, when you look at the different sectors across the US market, in fact, the global market, it was impacting things like trade finance, banks that are typically known to be heavy in trade finance, included US banks, Citigroup, JP Morgan, BNP, Standard Chartered, HSBC, and so forth. So I would think, we put the tariffs and the uncertainty together. I would hope that the US administration will be looking to alleviate some of that uncertainty. And, when you've got more than 2 million tariff lines to look at, it is a challenge, but I do believe they will be looking to try and make it as systematic and room for manoeuvre as possible.
Yeah, I'm glad you underscored just the how mind-numbing, really just getting one's head AI assisted understanding of everything that's going on here, Geoff. And the part of the offset that looks to be starting to come through, and I think Goldman Sachs overnight reduced their projections for the 2- and 10-year U.S. yield, is really the Fed, and at what point the Fed might need to come in early to offset a lot of the uncertainty out there. Might the Fed be able to put a floor underneath its equity market, Geoff, in your view?
I'm not sure how much room it has. PCE core deflator, it should have been lower in the first quarter. Because you had that high base last year. So, what was the last print? 2.8%. So if that creeps up to 3% at the same time, some of the slowdown in the US, you had those 25% market gains in 23 and 24. That created a wealth effect and really did fire consumer growth as well. If that's not happening and you do have these early gauges of consumer sentiment actually materialising, then you could have growth sub 2% and you've got PCE hitting 3%. So I'm not sure how much room the Fed would have, but what if you got 6 more FOMCs before the end of 2025? The last one's on the 10th of December, and I think majority's around 50 bips or 75 bips in cuts, and that'll obviously sway and be quite fluid based on what the outlook for inflation and growth is in the US.
Geoff, just to maybe turn the page and pivot the subject matter now to China, and certainly, as you would know, the resurgence in this market. How has that showed up in your part of the equity markets as far as flows or ETFs or what have you?
Yeah, it's definitely showed up. That's the most important thing, I guess, David. We listed another ETF today. And if you look at the existing 3 southbound ETFs, the 6 northbound ETFs, the combined AUM is now around 700 million Singapore dollars. So the last 15 months, our AUM of our ETFs has grown, from about 10.6 billion at the end of 2023 up to 13.8 billion now. And these 600 million of southbound flows into these 3 ETFs, or AUM I should say, has been a really important part of our FDI portfolio inflows into this part of the world as well. And I think really what's happening out of 2 sessions, and obviously the 30 ways to revive the consumer market that was released on March 16, in addition to all the work that's been done, I think what's interesting is what's been in play in our market, and it sometimes gets a little bit overshadowed, is our industrial value chain. I think globally, supply chains, yes, they're shortening in the US, but you can see what China's trying to do with services-led growth to reinforce their supply chains, their role in the global value chains. And I think that's impacting our industrial value chains now, particularly when you've got AI coming in and helping the automation process and potentially generating growth from within and providing productivity leads. So industrials have definitely been in play here in Singapore. Our STI had a great quarter. It was up 5.3% in total return. And our strongest stock was, of course, an industrial play. That's with Singtech Engineering, and its turnover doubled and it generated 46% gains. And that stock also made a pretty important investment in the US a good 6-7 years ago into Middle River. aerospace structures, where it has 2 million square foot of production capacity in the United States in the avionics and defence field. And that stock itself, as I said, also found ways, being an industrial player, to increase its productivity. Its revenue last year was up 12%, but its attributable net profit was up 20%.
Geoff, that's a good point. I was going to ask you about Singapore, but since you've opened the door there, there are, what's the best way to describe it, sort of counter-cyclical, sort of bad news agnostic themes. To your point, Singapore is a really good example of that. I mean, we've come up with a list here of really the markets in the Asia-Pacific that have either recently entered a correction or near a bear market. And we talked about China. China's not part of that list. And also is Singapore. And I'm wondering if you think this, the conditions around why Singapore has done well, do you think that can continue beyond the first quarter? And what else are you guys cooking up there at the SGX this year?
Yeah, look, gains were broader across our market in the first quarter versus last year. Case in point is our banks make up a big part of our STI, around 53% at the moment. And that weighting pretty much was maintained in the first quarter versus last year, where it grew 7 percentage points. So we're seeing broader gains. Obviously, we are a REIT hub. And I think the more that global growth kind of starts to come off and systematic traders rotate out of the big global growth stocks, they will be looking for value, they will be looking for income, and that is one of the sub-brandings that we do have here, David. We have value because of the income and the dividend yields, which are among Asia's strongest, and I think globally, it's not a great outlook, obviously, for global growth. We are expecting to see deceleration, but at the same time, there are key sectors in play. ASEAN obviously has had for a long time digitalisation, sustainable solutions and regional integration as its structural builders. We have a lot of stocks that have exposure to those structural themes, but as you say, when you look around, there's been a bit of mean reversion with our neighbours, basically in the bigger decliners across the leaderboard so far this year. But nonetheless, those structural themes are in play, albeit we get a little bit less attention now because the rest of the world is also pursuing these structural themes, which have obviously debases some of those FDI flows into our region.
Geoff, thanks very much for your time this morning. That was Geoff Howie there, market strategist at Singapore Exchange, and we'll have plenty more ahead. This is Bloomberg. Some breaking news. We've got the outcome in the vote to fill an open seat on Wisconsin's Supreme Court. So voters did have the opportunity to decide whether to tip the balance of the state's highest court to the Conservatives. Ultimately, though, we're getting news outlets NBC and also CNN are calling this for the Democratic-backed candidate and also Circuit Court Judge Susan Crawford. She has prevailed, and so she's also beaten the former State Attorney General Brad Schimmel, who importantly was backed by Elon Musk, making this the most expensive race that we've ever seen in history. Actually, more than $80 million poured into the effort. Okay, that's the breaking news on your screens. And yeah, we have more details on that, of course, as you can see there on the Bloomberg terminal. The other big story we're tracking right now, and, this is actually part or potentially part of any sort of trade settings and negotiation between the U.S. and China. So we understand that Donald Trump, and sources have told us that Donald Trump is in fact set to meet officials today, Wednesday, in the U.S. here to consider this proposal for divesting TikTok's U.S. operations from its parent ByteDance. Newly Purnell, our tech reporter, is here with us with the latest on what we know so far. Here.
Yeah, so interesting. A lot of news in the world, but as you said, the April 5th deadline is coming when ByteDance is supposed to either divest their TikTok operations in the U.S. or face a ban. So now our reporters and colleagues in D.C. reporting that President Trump is set to meet and to consider a new proposal. It would be Oracle and Blackstone in a potential JV with possibly some other investors to take over. And there's two key elements here: that it would satisfy data and algorithms. So the idea would be the data of U.S. citizens, which has been a concern among lawmakers, would stay with Oracle in the U.S., and it would allow ByteDance to still remain control of its algorithms, which is the secret sauce that drives TikTok. So it could be a new proposal that would satisfy both of those.
So what comes next then?
Yeah, so there's still a lot of stuff up in the air. President Trump has said he's open to maybe even extending the deadline. It's unclear the extent to which ByteDance has been involved in these talks. Beijing would need to approve. So a lot still hanging in the balance, and but a potential interesting proposal that could satisfy a lot of folks involved.
Yeah, certainly. And to what extent this then affects the eventual tariff that the White House then, of course, imposes specifically on China. Thank you so much. Yuli Purnell there on the latest here on the TikTok story. Right, plenty more ahead here on The China Show. Right, just an update here on these car makers. As you can see on your screens, the Xiaomi is top, and then you have, of course, some sales numbers coming through for March for BYD, NIO, and Geely. As you can see, Xiaomi's now reversed earlier weakness coming through out of because of the, that accident that involved one of its cars, driver assisted, that did result in, of course, in unfortunately some deaths there coming out of the company as well. They confirmed that specific report. Okay, just very, very quickly, about an hour into the session right now, and the Standard Chartered has become the latest bank to upgrade their growth forecast for the economy to at about 4.8%, which is effectively where a lot of these Wall Street banks and Chinese banks have been starting to coalesce around their year-end forecast here for the economy. We're now higher and also have reversed and shaken off the early cobwebs in this equity market.
It's 11:29 a.m. in Tokyo. Japanese traders about to go into their lunch break this morning. We've got stocks that are trending very flat today. Actually, we've got the topics a little bit under pressure so far, but we are getting further reaction from different officials essentially about the US tariffs. We're on the countdown to that. And essentially, we had a way to answering questions in Parliament earlier this morning, and he's saying that tariffs, of course, they could affect sentiment, and they're still trying to understand and wrap their heads around the whole picture of US tariffs, which, of course, a lot of governments are trying to understand as well.
Well, everyone in the world is trying to understand it, and I think our starting point, ideally, would be starting tomorrow when we finally have what we're working with, and then we sort of work backwards there in terms of the impact, right? But if Scott Bessent's guidance is, I guess, any clue of how things would go, I guess it underscores why markets might be coming off lows a little bit, so they're either more targeted, nuanced, or if it is 20%, that is the worst, that's a cap, and that's a worst case scenario coming through. As far as markets go, and we were just pointing this out, flip the page, please. So we're now down, let's call it flat now on the regional benchmark. And most sectors are either off lows or in some cases have actually turned now slightly to the upside. Volumes are, though, still on the lighter side of things. Let's talk about earnings now. Why not?
Yeah, well, of course, Kweichow Moutai is going to be one of those releasing its full-year earnings later today. And when you take a look at where the stock's traded, I mean, it really hasn't been caught up in a lot of the sort of optimism around Chinese equities so far this year, which you could kind of expect, of course, because that's been more tech-related, and this is a consumer-facing stock instead. But let's get more on it now and bring in Jennifer Song, a senior equity analyst at Morningstar. And Jennifer, we can start with your expectations. What are you predicting for the results later today?
Actually, the company has already released the preliminary results, so we don't really expect any material surprises for the result itself. However, we would like to hear about the management guidance on the 2025 demand outlook. So generally, the company will give a sales growth target for the year. So currently, we're targeting for 10% growth. If anything about that level, that will deliver a positive surprise for the company.
Right. So we're going from, let's call it 15% if the prelim guidance is any indication, to 10%. What would you say accounts then for the, let's say, the moderation in the growth? What are your expectations for the business environment this year?
Actually, growth is slowed from mid last year. So if we look at the fourth quarter growth, the Moutai's result just indicate like a 12% year-on-year sales growth. So that slowed from 15 in the first quarter, but first 3 quarters. So that reflect the overall weak consumption environment. And we expect the weakness to continue in the first half of this year. So that means the overall demand growth will slow down.
And so what approaches do you expect the company to take then to mitigate that slower growth? Do you think that they continue to go maybe into their premiumization strategy, or do they increase their marketing activities? What are the remedies for this?
Yeah, the company has taken quite active steps to help distributors to clearing up their inventory level. And based on our recent channel check, we see the distributor's cash flow that's improving. That's a good sign because when the distributor has a better cash flow, they have the ability to restock in the later time. So they pave the way for future growth. So that's a positive thing. That meaning the sector already at the bottom because the distributor's cash flow and overall healthiness for the inventory level, that's all improved. Since I think in the past 1 or 2 months, so we will see a better growth in the second half for this company and also the sector. And another thing is Moutai's wholesale price that is stabilized around 2,100 to 2,200. So at this level, distributors' margin is still reasonably decent. So that will improve distributors' confidence because currently is a slack season for Baijiu sales. So when the demand pick up in the second half, the distributors' profit will be increased. So that also gives some support to the distributor confidence. So in overall, the sector's health level that's improving, gradually improving at this moment.
Right. I'm glad you brought up the channel checks because this company is fairly unique and I think to the point you're making that the wholesale prices is between them and the distributors. But what are you seeing in your channel checks as far as the retail pricing is concerned? Because I guess that in many ways that goes into what that margin looks like for those distributors.
Mm-hmm. So actually for the distributors, for the overall distribution section, the break-even point will be 1,800. And so there's different levels of distributors. So, but the overall break-even point for the bigger one will be 1,800. So if the wholesale price above that level, distributor still have a profit to earn. And in terms of retail price, because the company has its own self-channel, the retail price is $14.99 per bottle. So it's very hard to get a quota to buy at $14.99 per bottle. So in the retail market, it's still about 2,200.
And just on the shares themselves, Jennifer, you think are shares fairly or undervalued at this point in time, and why?
The shares currently is still undervalued compared with the company's very strong competitiveness in the Baijiu market, and also the stable growth for their profitability. Even we see the demand slowed a little bit, we're still targeting for at least 10% growth for this company, given its market cap is so big and the company is so big. So the 10% growth is quite decent. And also specifically for this company, the company has announced to lift the dividend payout ratio over 2024 to 2026. So over the 3 years to 75%. That will also improve its dividend outlook. And if tonight the company may announce any special dividend, that will be quite positive.
Jennifer, I think you've really outlined very nicely and clearly that this is still a fundamentally good story, and the stock, as to your point, might be undervaluing that fundamental story. What is your sense, and you talk to investors a lot in your position, what's your sense of foreign investor appetite to hold this stock?
Generally, investors will like Moutai, and because it is quite unique in mainland China. So because all other brands, they don't have that competitive edge compared with Moutai. And another thing is Moutai cannot be replicated. So most of our clients, if they want to go into a Baijiu position, they will first look at Moutai.
Jennifer, thank you so much for the time. Jennifer Song, there are senior equity analyst at Morningstar, giving us a preview of these Moutai earnings, which should come out in a couple of hours. Okay, let's have a look at the Hang Seng Tech Index. So this reversal, quite visible on your screens. We're now near session highs, 1.2% to the upside, so we could actually get a day two of the rally taking place here. Some of the big movers underneath the hood, you look at the likes of some of these chip makers. I believe Hua is a big one there. SenseTime, it's an AI play. Sunny Optical, of course, a hardware and Apple play in some cases, and Kingly, which is a software maker there. So very nice gains. Let's call it an AI theme here playing out across these markets. Might be down to the Alibaba story. Who knows? Okay, plenty more ahead. This is Bloomberg.
You're watching the China Show, and we're on the countdown, of course, to President Trump announcing his tariff plans, and then we're hearing that a range of different scenarios are still being mooted. But at the same time, corporates need to understand how they plan to manage these range of scenarios as well. And last month we had reporting that Walmart was pressuring its suppliers in China to cut their prices by 10% to help offset the duties and the impact on its bottom line. We're hearing now in an update that they're actually keeping that pressure on their suppliers, so they're not changing what essentially they're asking of businesses that they work with. Yeah, I guess in the same way that in the news world, the phrase we like to use is we warm up potential resource speakers in the event some certain news happens. In this case, they're warming up their suppliers in the event we do get tariffs there on that front. Okay, speaking of, so we're done with it's April 2. Which reminds me of the tariff story, which also means that there is a fresh quarter that's ahead. And Bloomberg Intelligence and our team there have identified 10 companies to watch globally for the second quarter. You look at sectors from biscuits to handbags to AI chatbots. On the list, you look at this part of the world here, the footprint includes the likes of Agbank in China, well, Agriculture Bank of China, your PDD, Pinduoduo, and of course the exchange operator, Hong Kong Exchanges. To get into the details of why these three made it into the list, let's bring in our team here. Francis Chan covers financials, and Charlie Wong, well, you both cover financials. Let's start with, let's toss the coin. Francis. Yep. There we go. Talk to us. Agbank, your pick.
Yeah, this is a bank we want to watch out for 2025. We think this may be the bank to surprise the market on the downside. Last year, this bank reported like 5% earnings gain, which is the best among the big four banks. But this year, it may suffer from as much as like a 15 bips margin decline. Versus only 10 bips decline estimated by consensus. We think that could be the sources of negative surprise, especially when last year it did the best among its peers.
Yeah, well, actually, speaking of its peers, do you think it stands out to the downside in comparison to other names as well?
There would also be some downside in the same set of scenario analysis I put out a month ago for others of the big four banks in China. But for others, there could be some other distractions. For instance, for China Construction Bank and Bank of China, they will have some earnings dilution from the new capital injection plans. So that may come more than just the margin woes they could be facing. ICBC, as the largest bank in the country, very well capitalized, but at the same time, just like Agbank, it may also be hurt pretty badly by margin decline this year.
Charlie, I'll bring it in. Hong Kong Exchanges, I think we're done with the first quarter. Earnings are out, I think, end of this month.
Yeah.
Your expectations there for earnings and how the first quarter went for the company?
Yeah, so it's definitely going to be a record quarter for them. On our numbers, they should beat EPS consensus by around 17%, so it's going to be a big beat. We all know how strong the cash equities market has been, and also the Stock Connect. But not only that, they have a very complementary derivatives business. So they have a huge suite of equity index as well as stock options, which have also grown exponentially. So we do anticipate a very strong first quarter.
And sorry, you mentioned about the cash equities growth. Do you think that's sustainable?
Yeah, so I guess that's the biggest question on investors' mind. When we look at the ADT, which is the average daily turnover trends, it's down from a peak of about 400 Hong Kong dollars in billions. and then in the first quarter on average is about 250 billion. So we do think that it is sustainable, pretty much at the first quarter levels. Now, the AI hype could die down, and it could affect the trading velocity of a lot of the tech names. But at the same time, just longer term, when we look at the trends, like mainland investors, they're so underinvested overseas. The Stock Connect, is one of the main channels, and we do expect that to continue. And then also with H shares, trading at a discount to A shares, we do think that they can still find value.
And the IPO pipeline, what is that looking like right now? This story seems to keep changing or getting better by the week almost.
Yeah, so every week it changes. Every week it's getting better. So on the latest numbers from the CSRC, which was out last week on Friday, there's about 160 applications that are still active overseas. 3/4 of those are for Hong Kong, so Hong Kong is definitely killing it. And we do think that that pipeline is going to continue to improve. There's a lot of companies like Cattle, huge A-share giants that want to list here. There's US companies, with geopolitics, US listed Chinese firms, right? They could come back to Hong Kong. And then also a lot of unicorns. Right, like previously they've held off plans, but now evaluation's improving. We do think that they would return to the market. And actually, I think in news like JD Industrial, they have also refiled their application for a Hong Kong listing. So, generally it's very positive for Hong Kong Exchange.
Yeah, we've been waiting for that IPO pipeline to start to fill a little bit, and it does seem like it's finally happening so far this year. Well, that was our Bloomberg Intelligence team senior analyst Francis Chan and also Shiny Wong there, and just taking a look at some of that list, the 10. Another name that stands out is Pinduoduo, of course, as well, because it's been such a standout really in 2024, but in going into 2025, the outlook is a little bit different for the business just because of that intense competition and the amount of incentives that they need as well to offer consumers to try and entice them to use the platform.
Yeah, I mean, does it remain the same Temu play, I believe, of course, that last year? That actually, I think there was one point last year, didn't the market cap of PDD surpass Alibaba at one point, and then the AI story that happened. Yeah, so those were the three, really, the 3 of the 10. You can check that out, by the way, on your Bloomberg terminals, the top 10 companies to watch, of course, in the coming months or so.
Yeah. Some of the other corporate stories that we're tracking as well today. Well, shares in conservative media outlet Newsmax have now surged over 2,000% since its debut on Monday. The boost gives the firm a market value of around $30 billion, which is greater than its established rival Fox. The post-IPO pop is reminiscent of the meme stock craze and comes despite concerns about the company's fundamental value and ongoing litigation. Chinese auto giant BYD is enjoying a strong start to the year with sales up almost 60% in the first quarter. The company says it's delivered over 370,000 cars in March, bringing the total for the first 3 months of the year to around 986,000. The numbers will likely be in stark contrast to US rival Tesla, whose first quarter sales may be as low as 340,000, according to some analysts. Xiaomi has confirmed that one of its SU7 electric vehicles was involved in a crash in China that media reports say killed 3 people. According to the company's initial report, the car's advanced driver assistant function had been engaged for less than 20 minutes before the crash. It added that alerts were issued because the driver apparently wasn't holding onto the steering wheel, which is illegal in China. We'll have plenty more ahead. This is Bloomberg. Well, as we count down to President Trump's big tariff announcement in a few hours, a closer look now at how they could affect the world's biggest plane makers. As Bloomberg's Guy Johnson reports from Airbus headquarters, the French aerospace giant may be better placed than its US rival Boeing in a global trade war.
These giant nacelles will soon become the key connection between an Airbus aircraft and its jet engines. Supplier Safran makes about 400 of them every year here in France. But since Donald Trump last imposed tariffs on steel, aluminium and aircraft during his first presidency, the company has significantly broadened its geographical footprint.
Our coding centers are next to the final assembly lines, so in China, Tianjin, in Alabama, USA, in Hamburg, Germany, and in Colomiers, Toulouse, France. This way, the final assembly line doesn't have to suffer any burden.
This is the Airbus A321XLR, the youngest
in its family. It has a nose from France, a body from Germany. The wings come from Wales. The rear stabilizer comes from Spain. Avionics come from America. When it comes to engines, you have a choice. You can either go American or French-American. It's up to you.
Airbus relies on as many as 18,000 suppliers worldwide to produce roughly 80% of the aircraft. To manage tariffs, the company has the option of using its US factory in Alabama.
We are procuring from everywhere around the world, assembling there in the US with US jobs, to US airlines as well. So I think we are key to the US ecosystem, to the aviation ecosystem, and we think that plays a big role in how tariffs are targeted.
In the end, Faury says that new tariffs may hurt Boeing more than Airbus. The US company uses parts imported from Mexico and Canada and does not manufacture in the EU. It could also lose out in the growing Chinese market. Unintended consequences of the new transatlantic trade war.
Guy Johnson there, of course, reporting from the Airbus headquarters in Toulouse. And yeah, just laying out your flying options out there. Right, so ahead of that, and well, on the back of that, ahead of tariffs coming through as well, 17 hours away from President Trump's Liberation Day announcement at the Rose Garden at the White House. And you know what? So it's actually playing out across these markets, I think, is an understatement. Goldman Sachs had come out in recent days, and I think, for one, they've brought forward the number of rate cuts that they expect the Fed to deliver this year. I think it's July is the first one. 3 for the year. I think maybe alongside that call, separate team, is you're looking at a revision here along the Treasury yield curve, where they think the 2-year goes from the previous forecast was for 3.95%. They now have a 3.3% projection on the 2-year yield. Do the math on your screens. And for the 10-year, we're looking at 4.35% from that level to 4% year end on the 10-year Treasury. Right, speaking of forecasts being revised, let's have a look at least at CGB. So we have bond auctions on deck today. You have a 2 and 10, and of course you have the first green bond being marketed, renminbi. So we're not expecting really a high interest rate, given, of course, where the anchor of that auction is going to be. All that being said, speaking of just the revised forecast here, Standard charted out with their latest one here on the economy, and they think actually we're looking at a 4.8% handle now, which is really where many economists have roughly coalesced their forecast on the economy, just under that 5% handle.
Yeah, but really it's the story today is the countdown to Trump's tariff announcement, and what stands out as well is less than a day to go, and we still don't know exactly what we're going to get tomorrow. So there's a range of different scenarios that have been discussed, and then you're going to get this announcement, but then what's going to follow that is, of course, going to be this period of negotiation, discussions, and I think something else that stands out from the past couple of hours is that we're starting to hear already from governments and from different officials. So, for instance, Japan, Thailand, just speaking out this morning, saying that they're also still reviewing and looking at the economic influence of it. That's what you see sort of showing up in implied volatility, because that's spiking in currency markets, at least, as traders, again, try to prepare for different ways that it could go. Yeah, I think that, the risky bet really is to play this out. And obviously, I'm not an FX trader, but I can imagine the math going through the head where the range of scenarios is wide enough that it pushes you to express it using cheaper hedges in the derivatives market, like these vol, for example. And as you can see, right? So on this point, we're coming off highs of the day, really, on the euro overnight. We're at 15 points. Right now, we were at 16 at one point. But suffice to say, going into today, as we come into 24 hours to that announcement, things are being effectively positioned for some fireworks still tomorrow. What's interesting, though, is the resilience that you do see in some corners. And we've seen China come online to the downside. It's actually lifted off that. And we do have actually tech stocks, for instance. Yeah. And it still seems to be that AI story that's playing out in China. You've got Alibaba, for instance, bringing out a new iteration of its QWEN model. And you are seeing upside across a range of different names. SenseTime, for instance. Lots of different China tech ones that are in the green. But that's it for the China show. Insight, it's next.